Hi traders, and welcome to my how-to guide on reading candlesticks. So today we're going to be talking about not only how to read candlesticks, but also how to trade them. So for this beginner's guide to candlesticks, let's first talk about the time frame. I have the 15-minute setup, and what this means is that every 15 minutes, this is the trading that occurred. Every candlestick represents a 15-minute trading period. So if I look here and just highlight this candle right here, this is the 11:45 candlestick. And what this tells me is everything that occurred between 11:45 and 12 o'clock. Then when 12 o'clock came, this candle formed. And from 12 o'clock to 12:15, this is all the trading that occurred. Now let's talk about red and green candlesticks and what they show. Every candlestick has four components: the open, the high, the low, and the close. So if we look here, you can probably guess that the open price was here. Not here, this would be the low, but here. The close price was here. And the highest price that this candle had traded at was here. So, open, low, high, close. Now, for a red candlestick, which would mean that price went downward, the opposite is true. We know that, for example, on this candlestick here, the open would not be here, as it was down here. The open was the lower part of the body, but the open would actually be here. And the close was actually here. And the same thing is true for high and low part of the candlestick. This was the lowest price that price had actually traded at, and this was the highest price that price was able to get to. So now that we've gone over what these 15-minute candlesticks show, let's talk about what they mean. So a usual rule of thumb is very long tails show weakness in that direction. So as we can see here, a much lower tail showed weakening strength in the downward direction, in the bearish direction, meaning the price was likely to move upward. So again, when price makes a very low tail, this is the tail right here, this stick right here, very skinny. When price makes a very low tail and then closes way above that tail, we can infer the price is more likely than not to go upward. And the same is true for the flip side. So if we go to these examples I prepared over here, you can see the price was trading downward, and the price had tried to go to the 25.60 level, but the sellers pushed the price back down to here. This had occurred again here, where again the open price was here, price had tried to go upward and was rejected at this level and closed below here. Now what this is telling me is that the bears are still in control, meaning that the sellers have the power. Basically, price will more likely than not be trading downward, as it did here. And if you had seen this candle form right here and think that buying here might be a good idea, you'd probably be dissuaded by this fact because of these two long tails that had formed above the close price. And price continued trading downward, as you can see here, until we had this right here form. And then this started to show that the buyers were in control. Much lower tail, price closes near the high, and as a result, you get this formation. So the last part I'm going to talk about is the size and momentum of these candles. So if we look here, price was trading upward, and then price had reached a point where it was consolidating, meaning it was trading sideways. And as price was trading sideways, we can see that it was this candle that gave us a breakout to the upside. So this is called an engulfing candle, and these can be seen in many places. This is also an engulfing candle. And what a strong engulfing candle usually looks like is no tails, or very, very small tails, as you can see here. Small tails here, with a strong move in that direction. And it's only an engulfing candle if it can engulf the previous candle before it, or engulf the structure it had formed here. So price is here from 15 o'clock to about 17 o'clock. And then after this period, with this being the high, this candlestick here breaks the high and goes above, meaning the price will likely continue trading in that direction. Now, candlestick trading is incredibly important if you want to make a profit day trading Bitcoin. If you are able to look at these candles and to isolate them and to find strength or weakness within them, then you will be able to make a profit. We can also go on a higher time frame, like the hourly, to really see this in action. And when you go on the hourly, your trading signals become much easier. So if we just look down here for a quick example, price had moved downward, moved up a bit, and then moved back down here to around a support level. And if you were here and you didn't know if you wanted to buy or just stay out of the market, what we would look at here is that there were many lower tails here and not too many higher tails. So if we isolate these 4 candles and quickly talk about them, we can see the price moved downward here, made a lower tail, but was not able to close near that low part of the tail. And then price moved here with not much movement either way. But then this candle is the most important candle of all. A very, very low tail that makes the low of this entire trading period. But then price was actually able to close all the way up here from its open price up here. And then from this, price again moved downward, but was not able to go lower than this tail. And then with this tail, closed right by its high. And then you get this. So if you had seen this structure, you would very likely want to buy around here. And if you had bought at 23.37, then held this, you would be about $200 up in Bitcoin value, which would be a very sizable profit. So again, just isolating tails and isolating candlesticks and looking at the open, the high, the low, and the close of that trading window, from here be 22 o'clock to 23 o'clock, can really tell you everything about the market. Now, if you have any extra questions or want to give me any feedback, feel free to leave them in the comments. Thank you.